Uber is currently trading at $64.91 and Lyft is at $13.36. And for my December 2026 price projection, Uber's earnings per share is expected to rise 68% from $2.03 today to $3.42. And even though their current PE is 32, I'm going to use 30 for this calculation because it does seem to be on a bit of a downward trend for Uber, and that would give us a share price of $102.60, which is a 58% increase from today. As for Lyft, they aren't profitable right now, so their 2026 revenue per share is expected to rise 34% from $13.36 to $18.08, and their current price to sales ratio is 0.99, which is actually historically quite low, so I'm going to bump that up to 1.2, and that would give us a share price of $21.70, which is a 62% upside. In terms of analyst one-year price forecasts, it looks like they are extremely bullish on Uber with a 43% upside this time next year at $93.35, and the same sort of story for Lyft. They're expecting a 32% upside at $19.04. Moving on to earnings, Uber has beat 3 of their last 4 earnings calls, and Lyft has smashed all 4 of theirs. And as for revenue and net income, both have great revenue growth, and both are starting to see some earnings growth, even though Lyft is having a harder time breaking through to profitability right now. The gross bookings are up 20% year over year for Uber, 17% for Lyft. Compared to their debt to equities, Uber's is a little high at 70%, and Lyft's is very high at 189. And Uber's price to free cash flow is 23.7, while Lyft's is great at 8.8. Overall, honestly, I do like the looks of both stocks, and I think both offer a pretty good reward compared to their valuation and debt risks. Each has strong internal metrics, both have great growth in revenue, but one thing that does stand out to me is Lyft is a lot more leveraged right now, especially when you compare it to their revenue and earnings growth. It just isn't as good as Uber's. That said, from a cash flow and valuation perspective, Lyft does look like the more attractive option, but for these reasons, I'm going to have to rate Uber a buy and Lyft a neutral. Uber's a buy because they have a reasonable valuation at their current growth projections, they have great supporting internal metrics and debt levels, and I would put the risk at low and reward at medium. And Lyft is a neutral because even though their valuation is great and their projected growth isn't bad, I don't think their projections are good enough to get people really excited, and at their current debt levels, it could be a bit of a concern if they don't meet or exceed their growth projections in the future. So I would say their risk is medium, and so is the return for Lyft. And if that's not exciting enough for you and you want to see a high risk, high reward stock, go over and check out this video right here.